What's up, y'all? No, it's weird. What's up, y'all? My name is Josh, and yes, this is what I look like for all you who've been wondering. Welcome to my YouTube channel where I provide fully transparent trade breakdowns, weekly watch lists, and educational content in order to find traders to help traders like yourself find their edge in this really crazy, hectic, choppy, unpredictable market. In this video, what I want to cover is my September monthly review, and I'm going to provide a day, not a day-by-day breakdown, but a weekly breakdown and a ticker breakdown of how I managed to make a profit, to turn a profit, this amount right here, in the month of September, where SPY returned about, negative 4%. So without further ado, let's get right into it. So let's just go through performance-wise what happened this month, both for the market and for me, and sort of give a roadmap for the rest of the video. So you can see here at the top that September SPY, this is the SPY price, opened around 350 and it closed around 334, which is around a 4% drawdown. And the high was 358 and the low was 319, which is around, I believe, a 38-point range. It was an extremely volatile month, going whipsawing sort of back and forth. And just to look at my return on the month, you can see it right here. And you can see that I returned around 18% on the month, which was around $9,000. And looking at this document here, I didn't accumulate that 9,000 consistently. It came in over the course of the latter part of September. And I think the reason that happened was because when the market conditions change, as they did from August to September, especially September 2nd, then you as a trader have to take time to evaluate where the market is and adjust your strategies. You can't use the same strategies in August when the market was just going straight up as it is in September when the market is going sideways. So it took me a little bit to adjust, and once I adjusted, I managed to make a nice profit, and that's sort of the name of the game here. And so in the first week I lost around $231, and the dates are a little cut off because I believe August 31st is included in that week, but I didn't include it in this P&L review here. The second week, I managed to keep actually my losses small. I was happy with the way I was trading because I could feel like I was just right on the edge of figuring out what the market was trying to tell me, and I just wasn't quite there. And 1473 down on the week, it's not that bad. I've had days where I've been down way more than that in one day. And so to sort of be figuring out myself and my trading in that week, I felt okay with my performance. And in the next couple weeks, I made the bulk of what I was going to make in September. I made $8,600 in those 2 weeks. And I think my trading style adjusted, and I adjusted in these sort of ways where right here, I made wider stops, smaller position sizes. I was way more selective with my trades. I was only trading relative strength names long, and I was taking my profits quicker. So these 4 adjustments that I made were adjustments that I made specifically for this market where we are chopping sideways for a very long time. Just like, look at this for a second here. So, and you can see that, we're just moving side. This is the keys, and we are after the big drop in the first part of the week, we are basically just moving sideways with sometimes lower highs, sometimes higher lows. It was a very confusing 3 weeks, and when it's confusing, you have to simplify your trading. You have to be able to adjust your trading and lower your risk by decreasing your position sizes, and also taking wider stops, because in a choppy market you could get chopped out, you could get your theta could get burnt, and you need to also be able to take profits quicker. And I think that was a key that I when I did it well, I made a lot of money, and when I didn't do it well, I ended up losing what I would make in the morning. And so my problems were basically holding too long. So in the morning there would be, you know, there would be market direction one way, and then over the course of the next 3 hours it would fade. And not taking my profit in the first hour was a really big problem for my trading. Another problem that I had was on these relative strength names. Not all of these are relative strength names, but they're all they were names that were doing slightly different things in the market generally. I would rebuy at a higher strike price the contract that I was trading, or the name that I was trading, and I would lose a lot of my profits because I would be rolling. I would use a rolling strategy. I would buy a higher strike, and ended up the name would not continue in the same direction. So that was a mistake too. I also had a couple times where I would swing too large overnight, and as a rule, I try to keep it between 5 and 10%. But in a choppy market where things can turn on a dime because of news, especially right now, you have to decrease your overnight positions, or if you're long, you have to include some hedges, ideally either on indices while you're long on relative strength names. So that was in general the sort of general adjustments that I made, and I think now we should get into the specifics of the day-to-day, the week-to-week, and how it was trading. So in this segment of the video, the question that I want to answer is, how do I trade this right here? And the answer is 1 day at a time. Very simple answer, but it's true. Because when you're in a strong uptrend, as we were in August, it's very simple. You just follow the trend. You can still take it 1 day at a time, but the trend is up. You can generally predict, okay, consolidation in a couple of days, move up, consolidation, move up, etc. But when we are moving sideways like this, when the market structure changes, so we're no longer in an uptrend, and you're questioning, are we in a downtrend? What are we in? Are we in a corrective phase, etc.? What you'll want to do is, or what I decided to do at least, is take these 3 keys right here. And the key for me is identifying a range. Okay, where's the high and the low? Identifying supports and resistances. And the previous run up, you know, the highs and the lows there will give you an idea of where the supports and the resistances are, the supply and demand. And then you want to identify pivots. So the pivots are slightly different. They're based on the high and the low of the previous day. They're based on structural support and resistances. They can be based on, you know, Bollinger Bands, Fibonacci levels, etc. They're also in consolidation periods. They are based on where price was defended and where price was bought, where price is trapped, where price has a floor, etc. And so just looking at the first part of the month here, on the first part of the month, the trend was still up. September 1st was right here. And I was long on a few names. I was long on Roku, Netflix, and Adobe. And the reason I was long is because we had this huge move up on the 26th. We had a couple a day sideways. We had a couple days sideways, excuse me, like on Netflix here. We had 3 days sideways. But those days sideways held 50% of the move. And that's one of the setups that I look for, is when we have a huge move up, we have a few days sideways that are essentially inside days or consolidating days that are holding 50% of the move up. that I'm looking for a retest of the high at the very least. So that gives you 50% of the move. You know, that's a pretty sizable move. And then also a chance to break that high and for new bulls to come in and push it forward. So that's what I was looking for on these three. And I was able to get at least a retest of the high on most of the names, if not a break of the high on Netflix and Roku. And on September 1st, I managed to make a good amount of money here. I managed to make $3,500. But as I mentioned, I still ended red on the week, and that was just poor planning on my part for later in the week, not being able to preserve those gains. And I in retrospect, it's actually quite poor, because I was looking very closely at the next day, September 2nd. I was looking to see, as this tweet indicates right here, I was looking for a break of this channel, but I didn't want to be short until the channel broke. And so I tried to go short here on the 2nd, and that didn't work because I didn't see this trend line. I drew this trend line afterward, and we bounced right here, and so I got stopped out of my shorts. And so on Wednesday, I believe that was a Wednesday, I can't remember exactly, I took a loss. But going into the next day, I put on some hedges. They weren't exactly hedges, they were actually trades, because as I posted in my last video, there was a hanging man candle on the cues. I will try to post a picture right here of that, or like right over there somewhere. And I was able to capture this gap down. And on the move down, my target was around 285, which was coinciding with my fib level, which was a support, and also the previous consolidation phase from the August run up. And I was able to actually capture some of the move down on the 3rd, just running puts all day. But I really got blown on the 4th, blown away, because my shorts got blown out of the water. Or sorry, excuse me, my longs, because I, on the 4th, was looking for a bounce. As you can see right here, I was looking for a bounce, and I got really smacked because I expected price to bounce at my support, and it didn't. And I got faked out by this candle right here. This candle, there was a push above, and we immediately slammed down really far. It went from 288 all the way down to 271, and I'm surprised I walked away but only down to 2100 on that day, to be honest. And the fact that we recovered back to 285 at the end of the day, wow, that was a crazy day. I remember that day. And I went into capital protection mode after that Friday, because I realized that my trading style was not like the sort of 3 steps that I had gave in the intro to this segment, I had not really laid out yet. I was too used to trading. I was too used to being cute with the August period and just relying on the trend to trade, and I wasn't really, my position sizings were wrong. My overnight risk was wrong. I wasn't prepared for what I realized was a change in the market structure. And I realized it was a change in the market structure when we no longer bounced at this 283 level. When we no longer bounced or held that 283 level, and we had this whipsaw, 15-point Qs day, 150-point Qs on the NASDAQ. It was, wow, I realized that I have to be able to trade better, and I have to be able to preserve my capital in this time. On Monday, we saw a gap down, and I was better prepared for it on Monday, but I was hoping that we would hold the low of Friday, and we were not able to. We were not able to hold the low. We actually ended up flushing at the end of the day. And for me, the end of the day flush was, I think, indicative that there was still a lot of selling pressure. So I was very surprised when we gapped up the next day to back up to this pivot right here, you can see that the pivot here that I'm looking at is 273. And let me pull up this chart right here. This tweet. We pushed back up to 273, which was the support here. And by opening above the support, you're essentially saying, okay, that is a stop that the bulls can play against. The bulls understand where their risk level is, the bears do not. And so the bulls had the momentum on the 9th, on September 9th, right around here. And I began to look for a deeper retrace, very similar to the one that I was looking on the 4th. But instead, I realized that, okay, now we might be able to get the retrace that I was looking for. I was maybe a couple days too early. And I think it's a theme in my trading that I'm basically a couple days too early. I'm a little bit too impatient there. And so we actually got a retrace to 282. We on the 9th, we went to 280, my first resistance. And on the 10th, which I believe was a Wednesday, we went to 282.50. We didn't quite reach 283 or 285 for that matter. And I think by not fully retracing 283, 285, I missed out on a lot of this short. I was able to capture the short after we fell through the pivot lower from the previous day, which, as I mentioned, was 275. Or sorry, the trap door, which was 275. Pivot was 273. We bounced on that in the afternoon, but we continued lower. We broke that low. And on the next day, let's pull this up right here. The next day, I was looking for a thrust into supply. 283, that's interesting. On September 10th. Oh, that was the day before. Yeah, that's this one right here. That's the one I was just talking about. But on the 11th, I got a bunch of sell signals right here. Right below this, the pivot of 273, I got a lot of sell signals on the leaders from the previous day. And let me just take a moment here to note what I mean. Like, the reason we look at leaders in the market is because they're the ones that are doing all the work. Apple, Amazon, Tesla, they're the ones that were doing all the work on the run up. A lot of names in SPY were basically moving sideways at the lower range of their drop from March. And so when the leaders started to roll over in September, that's when I realized, the light bulbs start going off, that these leaders from August are actually turning down. We're in a correction phase here. I have to go into capital protection mode. Now, what would become a theme later in the month, other leaders would start to reveal themselves, the true market leaders, the TMLs. And once the TMLs are Zoom, P10, Crowd, etc. DraftKings right now. These names are right now what we call true market leaders, because they're the ones that are still pushing higher. Their valuation right now, people still want in. They're still hot commodities. Even in a market that is in a correction mode, people are dumping Apple, dumping Tesla, and they're buying DraftKings. They're buying Zoom. At least that's where the money is rotating to. It might not be retail. It could very well be these bigger investors that in these correction mode they're pushing these other stocks higher. And so later in the month, what I'm looking for, or later in the month becomes a theme that I start to trade essentially only relative strength names long. The reason you want to do that is because in a choppy market, the range on Amazon and Apple is basically their lows. And if we're not going to keep making higher highs, you're stuck in this very trappy range where you get up 30 points, 100 points on Amazon one day and down 120 points the next. How do you trade that? It's almost impossible. But instead, you want to be looking, at least for my trading style, I look for momentum names. And momentum names later in the month would become to be Zoom, Roku, even DraftKings. Like, those were the main stocks that I was trading. Tesla, I still traded because I'm very familiar with the name. I'm able to identify more or less where what the range is, and the range is so wide that I'm able to capture, even if I capture part of that, it's basically much better than trading 2 points on Apple for my trading style, for my risk management as well. So in the last segment, I said, how do you trade a choppy market? Day to day. You focus, each day is its own animal. Highs, lows, whatever. I also said you focus on the relative strength names. And so for the last 5 minutes, this very long video so far, this is a huge part of how I made a profit in September, is I traded the relative strength names. And by relative strength, it's the name itself is indicative of what I mean, that the name is relatively strong compared to the indices. And the index that I'm comparing it to is the NASDAQ, the Qs, instead of SPY. And there's a longer answer for why I'm doing that, but a lot of the market leaders follow the Qs instead of SPY. And the short answer for why I'm using QQQ instead of SPY is because in August, the Qs were outperforming SPY. That was the leading index. That was leading index. So that's the index I want to watch for, leaders to compare against, for relative strength names to compare against in September. So let's look at DraftKings, for instance. DraftKings chart looks nothing like the Qs, almost absolutely nothing like it. It is its own technical beast, and you are able to trade more or less DraftKings independently of the index, so long as there's not a broader sell. And there's some days in here, so from 9/17 to 9/19, there was a little bit of a downtrend, and in DraftKings there was also a downtrend, 9/17, and right here 9/22. So there is some overlap here, but the structure is very different. And so in DraftKings, for example, as I mentioned, you want to hold 50% of the move before looking for the next leg. After we broke this pivot on DraftKings, 44.79, which was the all-time high on DraftKings from the yearly chart. Sorry, I'm using this very small screen. 44.79 was the all-time high. That's the pivot you're looking to break. Once we broke that, we tested it on the 10th. Once we broke that, you can look higher. For me, my higher target was 55.50. I called it out multiple times on Twitter. I said that we're going there very quickly. 55.50. Lo and behold, 918, 919, 918, we hit 55.50. And after capturing this move right here, I lightened up on DraftKings and I waited. Because after you hit a target, again, I said this earlier, I said, sometimes as a trader, you think that the price will keep going up. But if you have these tools in place, you know when to lighten up. And so I lightened up at 55.50, and I was content to wait until I saw a better opportunity emerge. And the 50% retrace from the beginning of this move, which was around 41 to 55.50, is somewhere around 47.50, 48. And we actually got down into 47.48, which happens to be this little zone right here on the run up, this little zone where we had a little bit of sideways action. That's enough consolidation on this strong name, 48, to continue forward. So I was able to get in long. Again, a very simple pattern right here, a breakout, a retest, and a bounce, a BRB, breakout, retest, bounce. Able to use that 55.50 pivot to my advantage on this name. Now we're in another strong move up, and my target is 72. That is the next level that I believe we're going to on DraftKings. Ultimately, I think we're going a lot higher, like to 100, I mean. Very similar to AMD, I think. So the next one is Zoom that I'm looking at. Obviously, the Zoom chart looks different than the NASDAQ, than SPY. Zoom had a really strong reaction to its earnings. It gapped up and then it retraced around 50% of its move up, and then it started to build. It started to staircase upward. Once we started to, I was cautious because in Zoom I was cautious, but once we started to reach that higher range, somewhere around 425, 450, I started to look long. And just to pull up this tweet I had about Zoom, let me see if I can pull it up really fast. Here we go. So on Zoom, I said just dip by ZM all the way to 500. It reminds me of Tesla in the early days. And I think I was right about that, because if you look at Zoom here, I said that on the 21st, I believe. Right around here, that's the 21st. The price was at 435. That day we got up into the upper range of 470, 465, and then a couple days later we're at 530. And on Zoom, that is a very strong move on Zoom. We basically didn't even stop at the earnings high, which was 477. We stopped for a little bit, but we pushed higher to 530. And now actually we're holding above what I consider to be this very nice range above the earnings high. We're holding above this we're creating a nice little bull flag here for a move up into 560. I think this is the next move up here in Zoom. But by trading a name that is exceptionally strong, you're able to capture. So on this move from, let's see, what day was this? 9/17 to 9/23. The market in that time frame went lower. Zoom is going higher. And so I'm able to focus on Zoom because I understand that it's a TML. I understand that it's a true market leader. And I'm able to identify pivots that are separate from the cues. I'm able to identify the momentum that is building. And I also knew on Zoom right here that this was a little bit of a climax top, and you can tell because of the volume on the sell. You can tell because of the volume. There is a little bit of greed right there, and for me that was a signal to get out. I was not long in any of this. I actually never traded it up until last Friday, which is in October, so we don't got to go over that. But the sign of a climax top was there for me, and I was able to get out there. Tesla, as I mentioned, I understand its range pretty well. And on the 11th, remember I said on the 11th on the Qs that we actually double bottomed right here. So if we're just looking right here, we can see the Qs double bottomed. Now I was noticing some very interesting price action on Tesla on the 11th, and what I was noticing was that they were holding very strongly the 360 level. 360 was being bought, just like Apple at that time. 110 was being bought consistently, and at the same time on Tesla, it's not counting exactly as a relative strength name, but we were making a higher, like we were not testing the bottom level here on Tesla, the bottom level being 330 as it was on the Qs. So relative to the Qs, there are more buyers. There is a divergence in Tesla relative to the Qs. And if buyers are propping up 360, it's very noticeable to me when buyers are propping up a certain level on Tesla. I'm able to identify, okay, what's the next set of targets? And you can notice the congestion right in here. You have around 395. So I put this tweet out. And this is on the 14th. So I said this at 133. So we're around like 410. And I'm what I'm saying is when we get over this supply zone right here, this congestion, we will be able to test up into the next supply zone. As I'm mentioning, you get from one level once you push past that, what's the next level? It's 450. And so we were able to get up into 450. We actually tested 460, a little bit of greed there, I think, on Tesla, because you're able to note where the supply zone is a little bit of an overshoot. But I was able to capture this move because I noticed the relative strength in Tesla relative to the Qs, and I was noticing that we're pushing above a specific supply zone. So Tesla was a great trade there. And then later on in September, I mentioned that we are building essentially a bigger flag. And this is October, so we're not going to worry about that. But so long as we're between 450 and 420, which is the range that was established during this little time frame here in September, right here, then we should not be trading Tesla. Again, you can see later that on Tesla, the information that I got on the 360 level from the buyers came in handy later when on the 24th, again, Tesla was overshot this price point here, and that overshoot brought in a huge short squeeze, I think, where we went from 360 to 400, very similar to earlier in the month. And I you know, price has memory, and so when the price touched that 360 level, you know, it's like the buyer suddenly remembered, oh, we're supposed to buy at this level, and they pushed it right back up to where it was supposed to be, which is around 400. And we were able to get back up into that previous range that we established earlier in the month, which was above 420. The last thing that I would like to emphasize to end this video is the thing that I think I did well to end the month versus the beginning of the month. In the beginning of the month, I did things well. I minimized my risk, but at the end of the month, I was not making huge days. In fact, some days I was making, you know, only less than 1%, less than 0.5%, but I was able to compound my gain day to day because I was being consistently green. I think by the end of September 30th, I was finishing up on 12 out of 13 green days, and I was tracking day to day, am I able to stay in the green for the day instead of going into the black? Sorry, staying in the black, not being able to go to the red. And I was able to do that, and it's really the first time in my short-lived trading career that I was able to do that for that long of a period. And my goal going forward is to continue to be green, black, whatever you want to call it, for every day of the month. That's the goal, ultimately. And if you're able to do that, these gains stack up. And I learned that lesson definitely in the last part of September. If you enjoyed this video, please hit the like button, hit the subscribe button, follow me on Twitter at WatchJoshTrade. You can hit the notification button here on YouTube to see when I go live, because some days I am streaming live on YouTube. I'm showing everyone what my profit and loss is in the morning. I'm tweeting about it during the day. I'm trying to be as transparent as possible, sharing what I'm learning from what I'm doing right now. And I hope you have enjoyed this video, and if you have any suggestions, please leave them in the comments. I really appreciate them. Thanks so much for watching. If you've made it this far, you're the best. Peace.